So for this Watch This Wednesday, I am going to be breaking a few of my own personal investing rules, but sometimes you are just presented an opportunity that is really hard to pass up. So today, we're going to be taking a look at Chargepoint. Hey everyone, and thanks for joining me today on this very nice Watch This Wednesday. My name is Matt, and as I mentioned in the intro, today we are going to be talking about Chargepoint. Now, before we start with this, I just have to say that this is not financial advice. Please don't take this as financial advice. If you do have any questions, please go speak to a financial advisor. But please do not make any investment decisions based solely on what you hear here. This is just for your entertainment purposes only. Not a bad one. I like doing those little very quick disclosure at the beginning. Also, if you haven't already, I always just want to ask, if you don't mind, stick around to the end of the video. And if you felt that you liked it, then you can hit the like button at that point in time, as well as, again, now we're at like 90% of you watching my videos are not subscribed. So if you enjoy this, I just ask that you maybe consider hitting that button. It only costs just a few seconds of your time. Once they make you have to pay to hit that subscribe button, I'll stop saying it, but while it's free, something maybe you should take advantage of. So if you're not familiar with Chargepoint already, they are essentially charging stations for electric vehicles. You could see them either in a commercial area, like outside of offices or businesses or airports, and they also have residential chargers that people can set up in their garages to charge their electric vehicles at home. Chargepoint was formed in 2007, but they didn't really start to rapidly expand their service until around 2017. And since then, this has been an exponential growth with the amount of charging stations they have available to consumers. I made just a quick graph here that'll pop up on your screen so you can see this with me. It just shows how many charging stations they had over the years since 2017. And as we could see, they have almost doubled the amount of charging stations. Actually, they've done way more than double the amount of charging stations they've had from June of 2017 to September of 2020. And right now they have around 114,000 stations available to consumers, but they're actually projecting to reach 2.5 million stations by 2025, which is going to be a tough task for them. But with the increase in popularity for electric vehicles, I don't see that being a problem for them because they'll have to be able to keep up with demand. Recently, it was announced that Chargepoint is going public through a SPAC, otherwise known as a special purpose acquisition company, and we'll talk more about the SPAC later, but the company that is helping them go public is Switchback Energy Corporation. So with this being a company that really hasn't fully hit the public markets yet, and this deal has not been fully completed yet, this isn't really going to be a typical Watch This Wednesday because there's no earnings calls really for me to listen to. There is no financial history or performance for me to completely dig through and give you my thoughts about it. But I do just basically want to keep it simple here and do a pros and cons, or what I like about them, what I don't like about them, to help show why this is a company that caught my interest and one that I would consider adding to my portfolio. Now today I'm going to start off with the good news, and this is actually going to be a longer section because I think this company has a lot of potential here. So a few things that I was able to find about this company is that they are currently the leader, at least in North America, when it comes to these charging stations. In fact, they are so large that they are 7 times larger than their closest competitor when it comes to the number of charging stations available. Clearly going to show that they dominate the market when it comes to these stations allowing people to charge their electric vehicles. And even though we see that they are 7 times larger than their second closest competitor, or the second leader in the space, they are still making strides, as my earlier graph showed, in expanding their presence, meaning that this company has the potential to be absolutely huge, and I wouldn't be surprised if down the road if they end up acquiring some of these smaller charging stations just to further expand their footprint. On top of that, they've also started the process of expanding in Europe. While they don't have many stations, or as many stations in Europe as they do in America, it is still great to see the exponential growth that they have and building more of a global presence. And I found this also from their website. I'll pop it up so you can see this with me as well. But it shows that someone plugs in every 2 seconds, which is a statistic that I was very surprised to see. Around here, there are a few charging stations, but I never actually see any cars at them, except for very rarely, like in a parking garage, I occasionally see a car plugged into them. So to see that people are using these every 2 seconds is incredible to see, clearly showing that there is a high need for a product like this or service like this. As we can see, they've already delivered 83.5 1.5 million charges, which is a crazy amount of people, again, utilizing this service. And as we could see, they have both AC and DC charging stations. Basically, the alternating current is going to be a little bit slower than the direct current when it comes to charging. And that's just something kind of worth noting. What I thought was kind of interesting, though, this is total side note, is I think it's called alternating current, was actually invented by none other than this guy, Nikola Tesla. So I just thought that was a little interesting that, we now have two car companies based on one person's name, and they're both electric vehicles. And this guy is also the founder or inventor of alternating current, or AC. So pretty funny. Now, another thing that I like, and to get a little bit more deeper into the numbers here, is that they are expecting a 60% annual compounded growth in their revenue for the next 7 years. So right now for 2020, they're anticipating around $135 million in revenue. So assuming their assumptions are correct with that 60% compounded annual growth, means that in 2027, they should be earning around $2 billion in revenue, which is a lot of money to be receiving through these sort of operations. So a great thing to see, and certainly something I like. Again, yes, this is a new company to the public markets, or it will be soon, but it's good to see a company that's going to hit the markets, but already has a strong track record of success. Yeah, first 10 years were slow, but since then, they've done incredibly great things to position this company to be a leader in a space that is only going to continue to grow and become more and more relevant towards our lives. With that said, though, let's just talk very quickly here about what I don't like about this company. Now, SPACs have been a very popular thing recently. I think there's been 6 SPACs since May, and it's been very popular specifically in the EV market. Notably, Nikola, whatever you want to call it, and Hyliion also went public through a SPAC. Now, a SPAC can be a really great approach for companies to hit the public markets, but there is a risk associated with investing in companies that went public through a SPAC. Now, I'm not going to take the time to fully explain a SPAC in this video and what a PIPE investor is, all of that fun stuff, just because that would make this video very long. But if that's something you feel you do have questions on, please leave a comment down below letting me know you need a further explanation, and I'll gladly make a video covering that, just so you can have a better idea, because recently we've been seeing some strange ways people have been going public, have been using the traditional IPO route. They've been using more of SPACs or direct listings like Palantir did. Quickly though, so this all kind of makes sense, a SPAC is a public company that is funded through investors. What you will commonly see though is once they go public, the company that is buying or merging with the other company is going to drop their name and take on the company that they sought after. So in this case, again, using Switchback as the example, once this merger, or if this merger actually completely takes place, then Switchback will drop their name and take on the name of Chargepoint. Funny enough, and I don't know all the details about this, but if you remember the name Playboy, they actually recently went through a reverse merger as well to become publicly listed again. Look into that on your own time, though. This is a family-friendly show. But for a SPAC to happen, the investors in the publicly traded company have to approve of the company that the SPAC wants to acquire with, meaning that usually they spend a lot of time doing their due diligence. But this is where the risk comes into play, because you don't know how well these investors are going to do their due diligence. In theory, they should go through the entire company with a fine-tooth comb, but as we see with companies like Nikola, that doesn't always happen. So when you invest in these companies through a SPAC, you're putting a lot of faith in the investors that are going to make this decision and see if it's a good opportunity. Now, I do think that Chargepoint is a little bit different than Nikola, are actually a lot different, given the fact that they already have a product, they're already in a revenue stage, so it's not like they're pre-revenue at all. They're already making money, and again, it's just something that is going to be needed, not just another competitor added to the playing field. Now again, too, we're not going to dive deep into the SPACs and PIPEs, but PIPEs have been known to shatter these deals in the past before. So that is just a risk, again, associated with this SPAC, but one, hopefully that doesn't happen in this case. Now, the other thing that I don't necessarily love about ChargePoint is that they don't receive any money for people charging to use these stations. So as an example, company ABC has a bunch of these laid out in their parking lot for their employees to use. Company ABC might charge their employees, we'll just say $2 an hour to use these charging stations, but Chargepoint doesn't receive any of that money that the employer charged the employee. And their reasoning behind that, or their thought process behind that, is in order for electric vehicles to become more and more relevant in our society, electricity has to be very affordable, if not free. And they feel that if they were to charge the corporations that have these in their facilities, then they would have to raise the prices that they charge their employees to use these charging stations. And just as a way to keep that cost low, they just basically sell them these stands and then they're done. So they no longer receive any revenue. Now, as many of you know, I'm a huge fan of reoccurring revenue, so that was a little disappointing to see, because even if they were to charge like 0.003% of how much they charge for it, wouldn't be anything astronomical. But as we saw, if people are plugging in every 2 seconds, that could be a great source of revenue. And given that this company isn't public, yeah, $135 million in revenue is great to see, and there's really no way to say that it's not a great thing to see, but that could be so much higher if they just charge like a fraction of a percent from what people charge to use these charging stations. Now, I get it. It's the right thing to do, and it's, better for the environment. I'm aware of all of that. But I would like to see that be a reoccurring source of revenue for them, so that way it's not a one and done deal. And also, I do think that if this merger successfully takes place, there's always a chance that investors will ultimately vote for them to start charging for other people charging to use this service, if that makes sense. But I get it. For now, it's a nice thing that they do, but I just wish it was another source of revenue for them, given that they're not profitable yet, even though they do have other revenues. So why am I interested in this company? Because this is very different than companies that I typically like to invest in. It's not under the radar. They're not profitable. They don't have track records or balance sheets or earnings calls for me to dig through and see where this company's headed, their performance, any like red flags or anything like that. So this is a very different kind of company for me to invest in, but it's one that I'm actually very excited about. One of the main reasons is, unlike other SPACs that we've seen recently, Chargepoint already has revenue, and a significant amount of revenue being generated, as well as, again, they already have a product out there. So that just gives me a little bit more comfort knowing we're not still in like a product development, testing, rollout phase. It's already out there and it's already widely used by consumers very frequently. And I always tend to feel that North Carolina specifically is a little bit behind the curve when it comes to innovative ideas like electric vehicles. So I actually went on Chargepoint's website, or I used their app to see if there was any of these stations around me, and there was a bunch. I think I said that earlier in this video already, but it was just crazy to see that there was actually these charging stations within 2, give or take, miles from where I live right now, considering I had no idea that they were there. So these are very accessible to everybody, no matter how remote you might feel your area is. Another thing is, I think I said this in another video before. If I didn't, it was when I was talking to somebody, but a lot of people for a while wanted to get in Tesla, but believe it or not, people actually thought it was overvalued and weren't sure how much higher that stock price can go. They were wrong, obviously. But they liked the innovation that Tesla had behind it. And so I would always suggest, maybe if you feel that Tesla's trading at too high of a valuation right now, maybe look into some other things like the sensors that they use for the self-driving aspect of the cars, and see if you can invest in one of those sensor making companies that might sell their product to other companies. And I think Chargepoint is a similar play to that. So rather than investing in a company that makes the electric vehicle, and now everybody's making electric vehicles. I just saw that they're coming out with an EV Hummer. There's a new electric Mustang out there. So everybody is making these cars now. But all of these cars need one thing, and that's a charge. So regardless of who you buy your electric car from, you're still going to need to charge it. And that's where Chargepoint comes into play. And to me, that approach to the EV space is much safer of a bet than trying to figure out which company is actually going to be the next Tesla. Yes, they're not going to be the only publicly traded charging station out there, but as we saw, they are by far the largest. And to me, that looks like they're going to be the most promising to have just such a huge footprint in the near future. So This is a little risky, but so is Peloton. I bought Peloton when they were very recent to the market. They weren't a profitable company at that point in time, but that investment alone has made this portfolio nearly $7,000 in just a few months off just like a $3,000 investment. So we've more than doubled our money, and sometimes I just feel like it's important to take a calculated risk. I'm not just, throwing darts in the dark and saying which one's going to stick to something cool. This has been, again, a risky investment, but it's one that I fully believe will ultimately change the way we look at the future with electric vehicles, given that these charging stations are going to become just more and more popular. So for those reasons, I'm very interested in this. Oh, and lastly here, before I jump to getting into the stock, is I think a $3 billion valuation for this company is very reasonable. I think I saw like NIO is around a $24 billion market cap right now. I think Nikola with nothing is still like a $9 billion market cap. $3 billion market cap puts Chargepoint in the same playing field as Workhorse and Hyliion, which makes a lot of sense for me. I think that starting at that $3 billion is a great place to start, but personally, I do see this company growing to be, maybe a market cap of like 15 billion within the next 3 to 5 years. Probably even higher than that if everything goes right with this merger and if they're able to turn a profit sooner than later. So this is a company I see with very high growth, and I even think down the road, if they start to make a little bit of revenue from charging people to charge for using their charge stations, I don't know how many times I said charge during this, but they could even pay a dividend in the future. So for those reasons, I'm going to add it to the portfolio. All right, so I did do this earlier because I saw their stock price was just popping off. It was at like $16 before market open, then it was at like $16.80. So I was like, let me jump into this before it's 20 and I get around to it. But apparently it's gone down since then. So we've already lost $48. What a strong start. But I can't really complain about that. This is the new Webull too, or this is what I'm using now for the paper trading. It's going to take some time to get used to, but so far so good. A little bit more bells and whistles than what I need. So you can see I gave myself the $5 million to start with, which is already down to $499. Hopefully the rest of this goes a little bit better. And we bought 150 shares. Now that amount invested, it was around $2,500 that I invested in. Reason being is because I'm actually considering putting closer to around $8,000 into this position, but it is one of those, and hopefully I'll get around to it this time, that I don't want to put it all in right now. Reason being is because this price right now is going to be incredibly volatile, meaning there could be other buying opportunities, but in case it skyrockets up, I want some kind of exposure in it. Other reason is because with this merger not being fully complete yet, we don't fully know the direction that this is going to head in or if the merger will even happen. So again, just err on the side of safety. Rather than dumping everything I have into it at once, I would rather just pump the brakes real quick, put a little position in there, and then just monitor it. I think I'll probably end up putting, another $2,500 in, I don't know, a month from now or so, and then we'll just evaluate it once this merger hopefully takes place and see how our position looks at that point in time. But yeah, we're still heading down here, so I might click out of this before I actually see it. But overall, I think the portfolios are looking good. I'm very excited to see where Chargepoint heads in, and I know this is a very different approach than what I typically take, and I'm sorry we didn't really get to look at like PE ratios, discounted cash flows, but none of that exists right now. I just wanted to give you my thought process for why I think this could be a promising investment. And also, live life on the edge a little bit. This is a pretty risky investment, but that's okay because we have so many other safe investments to off-put it. And I didn't go 100% at once. We just went that 20% to start off with, give or take. And we'll just monitor the performance from there to see when we should add to it or if it's appropriate to continue adding to it. So I hope that you enjoyed this video, and I would love to hear your thoughts on Chargepoint or if there's any other kind of charging stations you think might be a better opportunity like Blink. But with all that said, I think I'm going to wrap up here. So please leave a comment down below if there's any other companies you'd like for me to take a look at or have any questions or would like for me to do a video on kind of SPACs, pipes, so you can further understand that as well and make yourself a better investor. Now, if you did make it this far and if you enjoyed the video, I will ask that you hit the like button. And, again, once you're over there, you should see the subscribe button. And if you do see that, it's just a good time to click it. It's free. So I just ask that you consider subscribing as well, because again, like 90% of you aren't subscribed, and really just helps me out a lot. So we broke 300. Thank you so much to all of you for allowing me to break 300 subscribers. Long time in the making, but couldn't be happier to see my channel just continuing to grow. So thank you again for your support as well. All that said though, thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. So I will let you go ahead, enjoy the rest of your day, and I will see you next time.